Hello everyone, welcome back to Brain Power Classes. This is our part 3 of class 12 economics chapter number 9, money market and capital market in India. So in this video we are going to start with problems of the Indian money market. So compared to developed countries, the Indian money market is less developed in terms of volume and liquidity. So let's see one by one what are the problems of the Indian money market. First is dual structure of Indian market of the money market. Sorry. So the Indian money market has both organized and unorganized sector. Because of this dual structure, there is a lack of coordination, transparency, and stability. Also, the unorganized sector does not come under the direct control and supervision of the RBI. So that's why there is a problem. So this was the first one. Second is lack of uniformity in the rates of interest. So different financial institutions like commercial banks, cooperative banks, NBFCs, and development financial institutions change different rates of interest. Since different types of borrowers borrow money from different institutions, interest rates are not uniform. Third is shortage of funds. The money market often faces a shortage of funds because people save less. Reasons like low per capita income, poor banking habits, wasteful spendings, inadequate banking facilities in rural areas. It can be any reason. For next is seasonal fluctuations. So the demand for money changes according to different seasons. During the peak season, especially from October to June, more funds are required for agriculture, trade, and business activities. This creates fluctuations in the money market. Lack of financial inclusion. So many people, especially weaker sections and low income groups, still do not have a proper access to banking services. This lack of banking access is known as lack of financial inclusion. Delay in technological upgradation. Modern technology is necessary for smooth financial transactions. Delay in adopting new technology affects the efficiency and development of the money market. So these were the problems of the money market, problems of the Indian money market. Now we will start with the reforms introduced in the money market. So what are the first is introduction of new instruments like new money market instruments were introduced such as treasury bills called T-bills, commercial paper CPs, certificates of deposit CDs. Money market mutual funds, MMFS, etc. Repo and reverse repo rate. So RBI introduced repo and reverse repo rate under the liquidity adjustment facility LAF to manage liquidity. Third is market determined interest rates. So interest rates are now largely decided by market forces instead of being fixed by the government. Fourth is NEFT and RTGS. So NEFT and RTGS were introduced to improve the payment system and make fund transfer faster and safer. Fifth is electronic dealing system. An electronic dealing system was introduced to improve technology and increase efficiency in the money market. Next we have capital market in India. So now let's move to the capital market. Let's understand first of all what is capital market or meaning of capital market. So capital market is a market for long term funds. It deals with both equity and debt funds raised within India and from abroad. An efficient just and if like an efficient capital market is important because it encourages investment and supports economic growth. The demand for long-term funds comes from agriculture, trade, and industry. The suppliers of long-term funds include individual savers, cooperative savings, banks, insurance companies, specialized financial institutions, etc. Now, What is the structure of the capital market in India? You can see this is the easy way to remember. You can see the chart here. You can refer this to for better sharpness. This is very easy. Now we are going to start with the structure of capital market in India. So first is government securities market. It also called the gilt edge market. So it deals in government and semi-government securities which provide a fixed rate of interest. Next is industrial securities market. This market deals with shares and debentures issued by companies. It has two parts: primary market and secondary market. So primary market deals with new issues of shares and debentures and helps companies raise fresh capital. And secondary market deals with already issued securities. Trading takes place through stock exchange, and the two major stock exchanges in India are like BSE, that is Bombay Stock Exchange, NSE, National Stock Exchange. Third, we have development financial institution, DFIs. So DFIs provide medium term and long term finance to industries. Examples like IFCI, IIBI, and Exim Bank. Fourth is financial intermediaries. So financial intermediaries act as a link between investors and borrowers. Like take examples like merchant banks, mutual funds, leasing companies, or venture capital companies, etc. Next, now we are going to learn role of capital market in India. First, mobilizes long-term savings. Capital market collects long-term savings from the public through the sale of securities and provides funds for industries and the government. Second, provides equity capital. It provides share capital to entrepreneurs, which helps them purchase assets and run their businesses. Third is operational efficiency. So it reduces transaction cost, simplifies procedures, and speeds up the buying and selling of securities. Quick valuation. Capital market helps in determining the fair value of shares and bonds and debentures quickly. Integration. It connects different sectors like real and financial sectors, equity and debt markets, government and private sector, domestic and foreign funds. So this was the role of capital market in India. Now with role we do have problems also. Now let's see the problems of the capital market in India. First is financial scams. Nowadays it's very common. So financial scams reduce investors confidence and create distrust in the capital market. Second is insider trading and price manipulation. Insider trading means buying or selling shares using confidential information for personal benefit. And price manipulation is like means artificially increasing or decreasing share prices through illegal buying and selling or selling for personal gains. Both practices negatively affect the capital market. Third is inadequate debt instruments. There is limited trading in bonds and debentures because of investors, high issue cost, limited access for small and medium enterprises. Fourth is decline in the volume of trade. Regional stock exchange have seen lower trading because investors mostly prefer major exchanges like BSE and NSE. BSE is Bombay Stock Exchange, NSE is National Stock Exchange. And our fifth problem is lack of informational efficiency. So an efficient market reflects all available information in share prices. Compared to developed countries, the Indian capital market still lacks complete information efficiency. So these were the five major problems listed here of capital market. Now we will be learning what are the reforms introduced in the capital market. So to strengthen the capital market, several reforms were introduced. First is establishment of SEBI. So SEBI was established in 1988 and received statutory powers in 1992. Its main objectives are protect investor, regulate the securities market, promote development of the capital market. Second is NSE, National Stock Exchange. So the NSE National Stock Exchange, NSE was established in 1992. Third is screen-based trading system. A computerized screen-based trading system (SBTS) was introduced to modernize stock trading. Demat account. Since 1996, investors can buy and sell shares electronically through Demat accounts. ADRS and GDRS. Indian companies were allowed to raise funds from international market through ADRS, American Depository Receipts, GDRS, Global Depository Receipts. And our sixth and last one is the last point of our chapter is Investor Education and Protection Fund IEPF. The IEPF was established in 2001 to spread investors' awareness and protect investors' interests. So, in this chapter, we studied the money market and capital market. The money market deals with short term funds while the capital market deals with the long term funds. We learn about their meaning, structure, functions, role, problems, and reforms. We also studied the important financial institutions like RBI, commercial banks, cooperative banks, DFIs, CB, BSE, and NSE, and understood how both markets helps in economic growth and the development of India's financial system. So, thank you everyone. Keep learning and keep growing with Brain Power classes. See you in next chapter. Bye.